Imagine waking up tomorrow morning and realizing your money never slept. While you were catching Z's, it was clocking in, hustling, growing, and quietly padding your bank account. You roll out of bed, brew your morning coffee, glance at your phone, and boom, another dividend payment hits. That's not a fantasy. That's the real-life reality for thousands of smart investors who've chosen to build sustainable wealth through dividend investing. But here's the kicker. You don't need to be a Wall Street wizard or a financial guru to make it happen. With a basic understanding of the stock market and a strong commitment to financial education and self-improvement, you can start earning passive income while you sleep, work, or vacation. Dividend stocks do the heavy lifting, paying you simply for owning them. And the best part? These strategies aren't reserved for the ultra-wealthy. Everyday investors, basically people just like you, are reaching monthly income goals of $2,500 or more by using proven methods centered around dividend investing and smart portfolio choices. Whether you're aiming for early retirement, extra cash flow, or just more freedom, dividend stocks are a powerful tool in your wealth-building arsenal. It's time to put your money to work. Welcome to Trailblazers Mindset, where wealth builders come to get inspired. Let's dive in. Let's discuss why dividends matter. Financial freedom means different things to different people. Some might consider selling their home or relying on Social Security. Others downsize and cut corners. But there's a better way, one that doesn't involve sacrificing your lifestyle or stressing about every dollar. That's where the dividends come in. This strategy isn't about flipping stocks or gambling in crypto. It's about building a stable, predictable stream of income that flows into your account while your core investment remains untouched. Dividends are like rent payments for owning a slice of the world's strongest companies. So, what are dividends? Well, I'm glad you asked. Let's break it down. Dividends are regular payments companies make to their shareholders. Think of it as your reward for owning a piece of a profitable business. Let's make this crystal clear. Picture this. Tony buys shares in a company called Sunny Sips Beverage Co., a thriving business selling organic drinks. In a great year, Sunny Sips earns millions in profit. The board of directors decides to share some of that success with the company's shareholders by paying a dividend. Now imagine this. Sunny Sips has 100,000 total shares in existence. It declares a $400,000 dividend pool for shareholders. That equals $4 per share in dividends. If Tony owns 250 shares, he'll receive 250 shares times $4, which equals $1,000 in dividend payments, sent directly to his brokerage account. No work, no selling, just income. So how do you know if a stock is good for dividend income? That's where dividend yield comes in. Here's the formula. Dividend yield equals annual dividend per share divided by stock price times 100. Let me illustrate with a real-life example. Tony buys a stock for $80 per share. The company pays $6 annually in dividends per share. Therefore, his dividend yield is $6 divided by $80 times 100, which equals 7.5%. That means Tony earns 7.5% of his investment amount every year without touching his original investment. Here are two powerful strategies to achieve $2,500 per month in passive income. Even if you're a beginner, these steps can guide you toward your goal. Strategy number 1. Covered call ETFs. Covered call ETFs combine the power of dividends and options income. Imagine your investments acting like a rental property. You earn income not just from the property value, but also from renting it out. These ETFs do that for you automatically. Here's how it works. 1. The ETF owns a basket of high-quality stocks. 2. It sells call options. These are like renting out the right to buy those stocks at a higher price. 3. Investors pay for those options, generating premium income. 4. That extra income gets passed on to you as high monthly dividend payments. In short, you get paid in two ways, from stock dividends and from the rent collected via call options. These are two examples of top covered call ETFs. Number 1, XYLD, which boasts a 12-month yield of 11.83%. Which means for every $1,000 invested, you receive approximately $118 per year. Number 2, OILK, which has a 12-month yield of 11.82%, which means for every $1,000 invested, you can receive approximately $118 per year. Now let's put this together again for Tony. It means if he invests $270,000 across these ETFs with an average 11.5% yield, he'll receive an annual income of over $30,000, or a monthly income of over $2,500. Now this is my beginner tip. Covered call. ETFs are great for generating high income fast, but they trade off some growth potential for that income. Perfect if you're focused on cash flow now. But most importantly, start small. Remember, the goal is never to dump all your cash into one ETF. Before we continue, if you find value in this video, please hit the subscribe button to join our growing community. We appreciate your support. Thank you. Strategy 2. High-yield REITs. Let's start by addressing the question, what's a REIT? A real estate investment trust owns income-producing properties, like malls, apartments, and warehouses, and passes most of that income to shareholders. You get the profits without ever fixing a roof or collecting rent. These are some of the reasons why REITs are built for income. 1. By law, REITs must pay out 90% of profits to shareholders. 2. Many pay monthly instead of quarterly, like most stocks. 3. They offer diversification across dozens or hundreds of properties. 4. They are easy to buy or sell just like regular stocks. And these are examples of top high-yield REITs. 1. Two Harbors Investment. 2. Brandywine Realty Trust. And 3. Orchid Island Capital. As usual, it's always better to start small and have a long-term focus. As we wrap up, please remember that the decision on which strategy to choose varies from one person to another. For instance, if you need income fast, you may consider starting with covered call ETFs, while if you want growth plus monthly payouts, then the best option is the high-yield REITs. In addition, as your understanding of the strategies increases, you may consider a combo of both strategies to balance high income and reliability. Are you ready to get started? Well, this is how I will approach it as a beginner. 1. Education. I will spend 30 minutes daily learning about dividend investing. 2. Open a brokerage account. Fidelity and Schwab are good examples of beginner-friendly brokerages. 3. Start small. Even $50 to $100 a week builds momentum. 4. Reinvest dividends. Let compound growth do the heavy lifting. 5. Track your progress monthly and celebrate every dollar your money earns for you. Remember, you don't need millions to build wealth. What you need is a good plan, consistency, and patience. Your $2,500 a month goal isn't a fantasy, it's a strategy. Let's get started. If you're serious about building real wealth, then consider this channel as your financial gym. Every video is a workout for your portfolio, your mindset, and your money skills. If today's video helped you level up your financial education, even just a little, please smash that like button and subscribe so we can continue to grow and build wealth together. If you are interested in how savvy investors are turning $20 a day into $1.4 million, check out our video on that topic. The link is in the description. Please note that we are not financial advisors. This content is for informational purposes only. Click on the next video on your screen. We appreciate your support. Thank you.